Okay, now I am back for 3 in 3. I want to cover up 3 of the business development companies that I think are the best possible buys in June 2024. 3 BDCs in 3 minutes. Let's get into it, my friends. Okay, so here I am in Excel. I have taken the data from the website, put it into Excel. I just want to do a little bit of sorting here. So I want to sort by the NAV return over the last 3 years by largest to smallest. There's a number there that don't have any data simply because they don't have 3 years of data. Now, what that gives us, for example, then Main Street Capital with the highest gain, Gladstone, Glad, FDUS, Fidus, Hercules, Capital Southwest, Aries Capital, Carlisle. So as we go down here, as long as we're getting a total NAV return of over 30% in my mind, I think we're doing fairly well. So this is what I want to look at. I want to find a company with a good NAV return and also a good discount. So number one for me here is going to be Fidus. It has trading very much bang on par and it has a reasonable NAV return. Now another really interesting option here for me is Barings. It has a slightly lower NAV return of just below 10 per annum, but it is trading at a reasonably good discount here, but also paying a good yield in the marketplace. Another option could be, for example, Golub Capital, which again is trading at a very, very small premium while paying a good yield for Blue Owl Capital. So I'm going to switch over to fast graphs now and let's have a look at what these look like as options. All right, first off, Fidus. So we can see the prices seem to track the normal price to earnings multiple here based on the adjusted operating earnings. The dividend yield shown here is not the same as what we saw on the spreadsheet, simply because this is excluding the special dividends. Now, if we scroll down here as well, another really important thing for me is seeing the analyst scorecard, which is looking fantastic. So most of the time, the company exceeds analyst expectations. I want to go to forecasting and normal multiple, and I want to click out here at 9 times. And when we're looking at about a price earnings of about 9 times, which seems fairly reasonable, total annualized rate of return of about 11.8%. Most of that is coming from dividend yields. So this, my friends, to me is looking fairly nice indeed. Switching back to the website, if we click on Fidus, just by way of checking, how is it doing? And we see this beautiful increase in NAV here. So this is something I want a piece of. So I'm coming down to Barings BDC. Now, Barings BDC has obviously had a very rough ride, so it's not looking quite as healthy as Fidus. So this definitely wouldn't be my first pick here. But if I look at the forecasting, click it onto the normalized price to earnings multiple, and what we can see here is the potential for up to 30% annualized rates of return if these estimates are correct and prices return to the regular multiple of 11 point. I think that's a bit optimistic. I think a PE of about 9 is going to be more realistic, at which point I'd expect about a 15% rate of return. And again, most of this is going to be dictated or driven by the dividend yield. Now, down on the analyst scorecard, it's not looking as good as it did for Fidus, which is why this isn't going to be my first pick. Back on the BDC universe, I can see that the NAV returns haven't been as strong as they were for Fidus, particularly when you start to put on the pair NAVs. We see that the growth has been much lower. Now, finally, I'm going to look at Golub or GBDC. Here on Golub, we can see this big increase here in the earnings driven by their floating rate loans that they have been issuing. We can see the dividend yield looks healthy, and if prices did increase with these rates, we could see, for example, a total annualized rate of return. But again, I'm going to moderate this down to the 9 times level. And here at a 9.6 times PE, we're looking at a annualized rate of return of about 17 to 18%. Now, the other important thing down here in the analyst scorecard is much better than Barings. We can see that most of the time they hit or sometimes beat analyst expectations and only miss just under about 1 in 6 times. So a reasonably good, solid opportunity here as well. Back in the BDC universe, as compared to Barings, we can see a much healthier NAV increase here. as well, a little bit lower than the peer NAV, but again, this is not a company that's trading at a steep discount, and it's still returning a healthy dividend yield and has good historic returns. So what do you think? Hit me up in the comments down below. Are these good picks? Are they going to be suitable for you and your portfolio to drive dividends and income? If not, why not? Let me know. I'm keen to hear your thoughts and the BDCs that you were looking at today.